Good day, friends. Today, we shall add to our knowledge accumulation the barbell strategy. The barbell strategy is an approach to risk management that focuses on extreme outcomes while avoiding the middle ground. Imagine a barbell with two weights at the ends and nothing in the middle. This strategy emphasizes allocating resources between low-risk and high-risk assets, avoiding moderate-risk investments. It aims to balance stability and growth potential while minimizing exposure to medium probability losses. Developed by Nassim Nicholas Taleb, this strategy is popular in finance and investing, but it also applies to other aspects of life and decision-making. Let me tell a short story to explain the barbell strategy. The farmer's dilemma. Once upon a time, there was a farmer named Ravi. Every year, he had to decide how to grow crops on his farm. He realized that weather was unpredictable, and betting everything on one crop could be risky. So he split his land into two parts. 90% of his land was used to grow a reliable crop like rice, which gave a stable income. 10% of his land was reserved for a high-risk, high-reward crop like exotic herbs that could sell for a fortune if successful. By using this strategy, Ravi ensured he wouldn't lose everything. Even if the herbs failed, he still had a stable rice harvest. But if the herbs succeeded, he would have a big bonus. Over time, Ravi became the most successful farmer in the village. Application in the trading. In trading, the barbell strategy involves allocating capital into two types of investments: low-risk assets 85 to 90%, bonds, treasury bills, or stable stocks that provide safety and steady returns. High-risk assets 10 to 15%, options, startups, cryptocurrencies, or highly volatile stocks with the potential for huge gains. By avoiding moderate risk assets, traders can minimize losses while still having exposure to high reward opportunities. This strategy helps in weathering market volatility and maximizing returns over the long term. 5 real-life applications of the barbell strategy. Career planning: spend 90% of your time on a stable job and 10% pursuing high-risk, high-reward opportunities like startups, freelance work, or passion projects. Investment portfolio: diversify your portfolio with 90% in conservative investments like index funds and 10% in high-risk options like venture capital or emerging markets. Health and fitness: 90% of your training can be moderate exercise for long-term health, while 10% involves high-intensity workouts to push boundaries and improve peak performance. Learning and education: spend 90% of your time on proven skills and mainstream education, while 10% is dedicated to exploring cutting-edge technologies or unconventional fields. Business strategy: 90% focus on core business offerings that are stable and profitable, while 10% is invested in innovative, experimental products or services that could disrupt the market.